Welcome to today's program titled CTA Compliance in 2025, What's Changed and What's Next? All participants are in listen-only mode. However, you are encouraged to submit questions throughout the presentation using the Q&A box on the right-hand side of your screen. For those interested in obtaining CLE credit, a code will be read later in the presentation. Please write this code down as it will not be repeated and is required for the CLE credit request form. During the presentation, you will see a slide containing a QR code that can be scanned to access and submit your request for CLE credit. You can also find a link to the request form in the connection details email you received. This presentation has been prepared by Seyfarth Shaw LLP for informational purposes only. The material discussed during this presentation should not be construed as legal advice or legal opinion on any specific facts or circumstances. The content is intended for general information purposes only, and you are urged to consult a lawyer concerning your own situation and any specific legal questions you may have. Copies of the program's recording and materials will be distributed to all attendees in the days ahead. At this time, I would like to turn it over to our first speaker. Brianne, you may begin.
Thanks, Jessica. Hi, everyone. My name is Brianne Vaklovic. I'm a partner in Seyfarth's corporate department and M&A practice group in our Chicago office. Good to be with you all today, and I'll turn it over to Stan.
Welcome, everybody. I'm Stan Block. I'm a partner in the New York office in the corporate department with principally an M&A practice in the telecommunications industry, although we touch all industries, and I do a fair amount of work in the commercial contract area. Both Brianne and I are members of the CTA, of our Corporate Transparency Act, which we'll refer to in this program frequently as the CTA or the Act, just to make it a little more confusing. Our agenda today is to really talk about what the Act says. We intend to cover that on as a refresher. We'll probably go through that fairly quickly, where we are today and how we got here, and then where we think it's going. At the end of the program today, there will be perhaps an opportunity to answer questions, and as was indicated below, please submit your questions. If we're unable to get to them, our intention is to try to respond by email to any question we get. And with that, that's the way it looks. I call this the roller coaster ride. I think Brianne will start us on that roller coaster ride. So let's go to the next slide.
Thanks, Dan. And I don't know if it's really a roller coaster ride. Those are mostly fun for most people, but I'm sure most of you, if not all, have heard of the Corporate Transparency Act or the CTA prior to today's call. But a quick refresher, the CTA is a federal law that took effect on January 1, 2024, and it requires most domestic U.S. businesses as well as foreign companies registered to do business in the U.S. to report beneficial ownership information to FinCEN. FinCEN is the Financial Crimes Enforcement Network, and it's a bureau within the U.S. Department of Treasury, meaning it operates under the authority and direction of the Secretary of Treasury. The stated purpose of the CTA is to curb money laundering, tax evasion, and other illicit activities by increasing corporate transparency. Unless a reporting company qualifies for an exemption, which we'll touch on later in the presentation, it must disclose the key details about its owners and decision makers, which is the beneficial ownership information, and keep that information updated. So as we talked about, while the CTA has only been in effect for a little over a year, it's already had quite a storied life for a one-year-old. And a lot of clients, and most of you on this call, are probably wondering, with all the legal challenges and shifting enforcement positions that we've seen recently, who's actually the adult in the room, and you know, who can we trust in terms of the positions that have been stated. So Stan, I'll turn it back over to you to walk through some of these twists and turns and recent developments.
Yep, I refer to it as the roller coaster ride, but I think your expression of twists and turns is probably more appropriate. Um, let's go to the next slide, please. So here we've tried to lay out a timeline. We don't cover every case that has been decided with regard to the act. We had an early case called the National Small Business case against Yellen, in which the court adjoined enforcement of the act with respect to the plaintiffs only in that case, on the basis that it was likely to find the act unconstitutional. That was a preliminary injunction decision. Soon after that decision, we had two court decisions which came to nationwide injunctions on enforcement of the act. That's the December 3rd, 2024 timeline that you see, and the January 7th timeline that you see. All of these cases are still pending, in addition to other cases that are pending, and all of them are challenging the constitutionality of the act itself. The first case went up to the Supreme Court. That's the Top Cop case. And the Supreme Court in that decision, mostly on procedural grounds, permitted the enforcement of the act to continue. That was on January 23rd, 2025. The sometime after that, February 18th of 2025, and this is after the Supreme Court came to their decision on January 23rd, that dealt with the case that got to it. That's the Top Cop case only. The second case that had a nationwide injunction was not part of that appeal, but on February 18th, after the judge in the second case paused the enforcement determination, or the injunction against enforcement, FinCEN came out and announced that it was extending the filing date to March 21, and that it was going to introduce interim final rules with regard to the act. And then soon after FinCEN came out with their announcement, the Treasury Department came out with an announcement which indicated they were going to suspend penalties, as did FinCEN in their announcement. And in addition, Treasury indicated that they were proposing to limit beneficial ownership reporting to only foreign companies. And that's sort of interesting. They indicated also that they were going to come out with proposed rules with regard to that. One of the problems with that determination is we don't know what a foreign company is. They didn't define it. The act itself, as it's currently is being interpreted, as a foreign company is a company that was formed in a location outside of the U.S. But as you think about what Treasury has indicated, that they don't believe enforcement should take place against domestic companies, but only against foreign companies, it raises questions on planning, on who the law is going to be applied to. And it further raises the question that, does Treasury have the authority and the power to determine that they're going to disregard the law and only apply it to a group covered by the law, which is foreign entities or foreign companies? So we're waiting for further information from Treasury and FinCEN. FinCEN, I think everyone knows, is part of Treasury, but they've come out with their own separate announcements as to where we are. We're on March 20th. We've heard nothing more from FinCEN. They've indicated that they expected to come out with their interim final rules by March 21st. So we're watching those. And obviously, when those come down, we would expect to get out of communication. We're faced with the question of we have a March 21 reporting deadline. That's the deadline set by FinCEN in their announcement. And the question on that is, what do we do about it? Because we've also been told that there aren't going to be penalties applied or fines or penalties applied for those who don't file their reports. There are some practical consequences to think about on this present state of affairs. So the law requires BOI reporting, or beneficial ownership information reporting. In our day-to-day life, we're doing sales of businesses, we're doing bank loans, and typically there's representations in those documents as well as many other commercial documents about compliance with laws. So the question is whether people should be thinking about taking exceptions to compliance with law, because the law is that you need to be filing. So if you don't file, you have the relief that we've been told that fines and penalties are not going to be asserted, but are you in compliance with law? And I would answer that question that I think any compliance with law representation or covenant that a person or party is required to make should take into account or take an exception for the present state of the act, and that is that there's been no filing as permitted by the Treasury ruling. There are a few other things that have happened along the way. There is proposed legislation. There was legislation passed in the House of Representatives extending the filing date to January 1, 2026. That was passed unanimously, bipartisan and unanimously, no dissents. There is a companion bill in the Senate, but no action has been taken on that. So there is, as a matter of law, no change in filing deadlines. But we know there's activity out there, and we know that President Trump was very joyful in his comments on the position taken by Treasury to only apply the act to foreign companies and not to cause the extra work for our domestic companies. So I would expect going forward, there is going to be more definitive legislation here, and all we can do is keep our eyes on what's coming down the pike. With regard to where we are today, we'll cover that as we talk about who's required to file, what to file. But I think each company needs to make some determination as to their own philosophy on filing. I think it's highly improbable that that there will be any actions brought against anybody for a filing after the March 21 deadline. But really, the answer on a lot of this looking forward stuff is we don't know the answer. We're waiting for further guidance. The question of what is a foreign company, my own view is that it's likely that the current definition that I indicated, which is a company that was formed in a foreign country or a country in a location other than the U.S. is probably going to be amplified. So, for example, if a company was formed in the U.S. or was formed abroad and registered to do business in the U.S., but had a certain percentage, again unknown, I'm speculating, but some percentage of ultimate ownership, ultimate direct or indirect ownership. My guess is that that's going to be referred to as a foreign company. So it's a company, again, speculation, but it is a company that has a certain percentage of its direct or indirect ownership owned by foreign individuals. And we know that the Act currently focuses on individual ownership. So my guess is that looking forward, a foreign company will focus on direct or indirect foreign ownership in that company. So if you have a company that has individual foreign ownership, you need to be on the alert for how that definition comes down. I think, Brianne, did you have anything that I haven't covered in that?
Yeah, thanks, Stan. I would just like to add that, as Stan brought up, FinCEN has not formally acknowledged the Treasury's announcement. And the Treasury's announcement, as you can see on that timeline, was on March 2nd after FinCEN's announcement. And so there is question about, Treasury's authority to even unilaterally choose not to enforce the act against, certain companies, as Stan already brought up. And it was actually just 2 weeks ago that both a Democratic and a Republican senator requested that the Treasury Secretary, Scott Bessent, actually provide Congress with a legal basis for the Treasury's decision in connection with that announcement. So a lot of uncertainty still on that front. And then the other point I would just make quickly is that on the litigation front, the Top Shop case and the Smith case, where we actually saw the national injunctions handed down, those continue to make their way through the appellate process. So, that we'll see what comes of those. The previous decisions happen pretty quickly. So eventually those might reach the Supreme Court. So we'll see what happens first. Next slide, please. So just going back to the law as it currently stands, we'll see what happens basically tomorrow, since FinCEN is expected to issue an interim rule by tomorrow. But in terms of who is required to report today, knowing whether your company is a reporting company is the first step in staying compliant here. So under CTA, a reporting company is any entity that is created by a filing of a document, so certificate of formation, articles of incorporation in the US. And so as Stan talked about too, a foreign reporting company is still a reporting company under the CTA, and that's an entity that's formed outside of the US but's registered to do business here in the US. And the uncertainty as we go forward is we don't know whether FinCEN will require foreign-owned US companies to report their beneficial owners. So that's still an open item. But in short, most small and privately held businesses, whether US or foreign and registered to do business in the US, are considered reporting companies unless one of 23 exemptions apply. So Stan, I'll send it back to you to talk about the most relevant reporting company exemptions.
Okay, thank you. I would also say on the, as you're looking today and planning today, if you meet the definition of a domestic company, that's where the uncertainty is on whether you should file or not. With regard to exemptions, and I think we may see something come down on this as well, on companies, but currently the law is that there are 23 very, very specific exemptions under the Act. There is a group of exemptions where the philosophy is that there is currently adequate regulation over those companies or those type of entities, and where those entities are doing reporting, where an exemption has been granted. And you can see on this slide at the bottom, we list examples of these regulated companies. Companies that file reports with the SEC, governmental authorities, banks, credit unions, all of these companies, and so forth. All of these companies are regulated type companies and have specific exemptions. And frankly, if you have a company that is a regulated company, you still have to look at the list to see whether or not that type of business falls within an exemption. So for example, as I indicated earlier, I do a lot of work in the cable television industry. We know the industry is regulated by the FCC, and it's typically regulated at the state and local level, but you won't see an exemption in the Act for a cable television company. So it's regulated, but it doesn't have a specific exemption. So if you are regulated, you still need to be looking at the exemptions. And then the exemption that we've seen is the most commonly applied is, and this is the next slide, please, is the large operating company exemption. And this is, here's the definition. It's a company that has more than 20 full-time employees in the U.S. It has a physical office in the U.S. that it owns or leases, and there's some special rules on the using affiliated company offices, but the requirement is that it has a physical office that it owns or leases, and that it has filed a federal income tax return for the previous year, which shows more than $5 million in gross receipts or sales. Now that return can be a consolidated return, a consolidated corporate return, and excluded from those sales are receipts or sales from outside sources outside the U.S. Our experience has been that most of the questions or most of the companies that have come to us and looked at exemptions have tended to fall under this. If you're a smaller company, you probably are going to be required to file unless you meet one of the other specific exemptions. There's also tax exempt entities are exempt. Note that a tax exempt entity, that a non-for-profit is not necessarily a tax exempt entity. So the rules on tax exempt entities are very specific. Wholly owned subsidiaries of certain of the exempt entities are also exempt. So if one of the regulated entities that we talked about a moment ago is exempt, its subsidiaries are probably exempt. And again, we would encourage you to take a look at the exemptions if you are a subsidiary of an exempt entity. And then inactive entities, and this is, as the slide indicates, is very narrowly defined as to what is active or inactive. But an inactive entity, similarly, is exempt. So if you have a company that hasn't carried on activities for some time, you need to take a look at the exemption. But generally speaking, activities are writing checks, money's coming into deposit accounts and going out. The kind of thing that is maybe very, very little, may only happen occasionally, but may render that company to be active as opposed to inactive. And incidentally, as we're indicating, look at definitions, we've said this previously, FinCEN published a small entity compliance guide, which is extremely readable and covers these subjects very, very well. So if you're in doubt, not sure of what something means, that guide can be the first source to look at, and typically is the first source for us to look at. As we look at that, we look at other writings, questions that are raised. A last category that you won't find in the compliance guide is that the parties who were plaintiff in the national small business case, that's the original case that I referred to, where an injunction was granted for enforcement against the plaintiffs in that case. They remain exempt because that injunction was not a nationwide injunction. It was not covered by the Supreme Court ruling that we referred to earlier. So if you are one of the plaintiffs in that case or a member of the National Small Business Association, which was the named plaintiff in that case, you are also going to be exempt. So if you're not exempt and you're required to file, we're going to next talk about filing dates, due dates, and the like. So next slide, please. And it's up there now. Brianne, do you want to
Thanks,
cover
Dan.
this?
And I do want to be mindful that we're about 4 minutes coming up on our time here. So I've seen some questions in the Q&A about whether there still is a March 21st filing deadline, which is tomorrow. And the answer is yes. FinCEN extended the compliance deadline to March 21st for most companies, as Stan just talked about. The filing deadline does not apply to certain plaintiffs in the cases that he had talked about, or it doesn't apply to entities that are eligible for disaster relief extensions. Or, for example, if you formed a company yesterday, you still have 30 days. But the big question, as we were talking about throughout this presentation, is whether reporting companies actually need to comply with this March 21st deadline. And the Treasury appears to say no to that question, but FinCEN has not formally acknowledged Treasury's announcement, other than to say FinCEN has also said we don't plan to impose penalties or fines until it issues additional regulatory guidance. Again, that additional regulatory guidance is expected by tomorrow. So in terms of next steps, if risk tolerance is low, filing now is a conservative approach so as to cut off any potential exposure and get it out of the way. But if your risk tolerance is a little higher and you are comfortable waiting to see what happens, even waiting to see what happens tomorrow, then you should at least still be prepared to file quickly if required. But we see merit in both approaches. If you do file your beneficial ownership report, though, do keep in mind that it does start the clock on making updates. Or if you learn of an inaccuracy in your report, you have to file an updated report within 30 calendar days. I did see a question in there about whether it would make sense to still file even though penalties are not being enforced. So keep that in mind in terms of filing. You do have the obligation then to update the report in 30 calendar days, which is a very short time period. Next slide, please.
I would say before we jump on the next slide that one of the concerns we've heard expressed is whether adequate notice will be provided by Treasury or FinCEN that they are now requiring filings of what we've characterized as domestic companies. And here again, there's been no guidance, but my own personal reaction is that if you look at history of what they've done on the March 21 extension, it's likely that you will have adequate time to pull together your filing itself. But the recommendation that we're making is continue to gather information so you have it and you're ready to go. The filing itself is a rather quick process. And my own reaction is I don't think the government on this is going to act in an abusive way. The main challenges that are coming are from people who feel that what has been imposed upon them has been abusive. Going forward, I think it's more likely that we're going to see a loosening of the rules as to what has to be, who has to file, and the time frame to file within. Sorry, Brianne.
Oh,
Next.
no, that's great. Thanks, Dan. And I think we're actually at time, so we'll put up the CLE code, and I'll read that for those attending that are eligible for CLE. The attendance code or the verification code for CLE is SS, as in Seyfarth Shaw, 3724. I'll just reread that. It's SS, as in Seyfarth Shaw, 3724. And I did see some Q&A that we didn't answer along the way, so we will get a list of those and try and follow up and answer those questions. But if you do have any questions, please feel free to reach out to Stan or I. We do have a CTA task force. And so we are monitoring FinCEN website and expecting an update today or tomorrow from FinCEN that we will push out a client update as soon as we can on that. You have anything else to add, Stan?
No, I don't. Thank you all for attending. We hope that there's been some nugget of help within our presentation. And as Brianne said, we're here if you have questions that we can follow through on. I would say stay alert to announcements that come out. There is certainly expected today, tomorrow, within the next couple of days, some further detail.